Hey everyone, this is Trader Investor. In this video, I'm going to continue to discuss SPY trading, and specifically, I'm going to focus on order block, demand zone, supply zone. So that's been the theme the last few videos that I have done, and I specifically want to talk about how an order block becomes a demand zone for yesterday and today's trading. If you look at a daily time frame, you will see that the area that I identified as an order block from an hour chart was hit, completely hit, and price reversed. So if you look at this, you will not be able to see the demand zone that I'm referring to, because an order block was mitigated. An order block needs to be mitigated. It was mitigated and price reversed back. So I will go down to the hourly chart and show you what I mean by the order block becoming a demand zone. So this order block, when price started to drive down yesterday, the day before, and then yesterday it really went below it. Now it created a demand zone here because price pushed up and there were some orders that were left open. So the very next hour it came back down, took those orders. Few hours later it came back down to additional orders. So this area then became an area of interest. So this order block, after it got mitigated, it turned into a demand zone. And this demand zone, you know it because as I mentioned, price came back and did not let bears take charge. As soon as price comes back to that zone, bulls take charge. Price comes back to that zone, bulls take charge. And if you look at the 15-minute chart, you'll see that same story where, about an hour and a half later, price comes back down. So this is the first hour where we saw on the hourly chart where price comes back down, and then it dries up for a few hours and then comes back down, meaning there were additional orders here that needed to be picked up, and those got fulfilled and then start running up. And then yesterday I mentioned we should always look at headwinds as potential target one. So this headwind for today was this supply zone. A reminder, we only trade with the trend. We're in an uptrend. We have a momentarily pullback. So when we look at supply zones, we're looking at them as potential target headwinds. We're not looking at them as a reversal point. So when price comes to a headwind, it could go through it, or it could stall and then go through it, or it could reverse from there. Any of this could happen. But we are not waiting for the reversal. We're trading with the trend. And as we trade with the trend, when price stalls at these levels, this is time to exit. At least a partial position, a good amount of your position you exit here, because price all day was not able to break above this area. It's a few cents, but in general it just stayed in this area. So supply zone acting as headwind and not wanting to hold overnight over the weekend. For me, this is 100% exit point, not 50%. If it was Thursday, Wednesday, yes. So order block met, mitigation happened, price drove up and then came back down. When it comes back down, as bears wanted to push price down, bulls step back in and drive it up again. Bears attempt again, and bulls this time, they really took charge and kept driving price up. And remember, headwinds is an important area to take your profits. You don't want to wake up Monday morning and have the market open down here. somewhere here. You don't want that to happen, because then you're giving up all these gains. That's not what you want to do. So you want to always protect your gains. On a weekend, geopolitical reasons, I always like to personally take off every position. Only my long-term holds are in. My swing positions, my day positions are off on Friday. Unless I'm really deep in the money in options, and I'm willing to take a small risk. I've taken most of my position off. I might do that, but that's very rare. So mainly today was to show you that an order block can turn into a demand zone or a supply zone, depending on where it's formed. And based on what you see on there, you take good action. And here today, price gave us an opportunity from yesterday. Yesterday it gave us opportunity twice, and this was not happening today. I really wanted to emphasize how this order block becomes a demand zone, and just because price kept pushing, really hone in on the idea that once you have a demand zone, price pushes, then today, where do you take the profit, right? All the positions that were taken yesterday, where do you take those profits? And that profit is at a supply zone, because it's acting like a headwind. And then we'll come back on Monday and reassess where the markets want to open. The futures will kind of give us an indication on Sunday, but Monday morning is the real action. So here's how the markets acted this week. Markets really drove up and then came back down. I mean, they came back down to the levels on August 3rd. So this, from August 3rd to today, price has come back to that area twice. That's the order block. So that's mitigation has taken care of, and price drove up. All right, everyone, take care and have a fantastic weekend, and I'll see you in the next video.